Are you sitting or standing?
Wherever you want. All right, I am very excited, and we will continue to run through the program today. We've got a lot of exciting speakers, and I would just invite attendees, if you need to take a break, you're certainly welcome to. There's doors in the back and doors in the front. At this time, I am very humbled and privileged to share the stage with such an esteemed group of people. We have with us today, oh, okay. Thank you. Scoot over. Tom Shapiro, who's an intellectual giant on matters concerning the racial wealth gap. He's the co-author of the seminal work, Black Wealth, White Wealth, a work that challenged how we think, frame, and solve for racial inequality. The first edition was originally published in 1995. Ironically, or maybe not ironically, the same year Hope Credit Union was founded. He has since gone on to author other works on wealth and inequality and has appeared in some of the most consequential news outlets in our nation. Judy Reese Morse is a renowned policy advocate and advisor from Louisiana. Please take the time to read her bio. You will be nothing short of inspired. She's worked in leadership at every level of government, from the mayor's office in New Orleans with Mitch Landrieu, to the office of the lieutenant governor, to the executive branch at the U.S. Department of Health and Human Services, and on Capitol Hill with Congresswoman Lindy Boggs. She may also very well be the most connected woman in Louisiana, I'm finding as I do more work over there. Every person I met with from the state responds to her name as if she's family. She is the president and chief executive officer of the Urban League of Louisiana. And finally, Ines Polonius. Ines is the chief executive officer of Communities Unlimited, a community development financial institution serving the rural South. She is one of the most sought after and accomplished rural community development practitioners in America. Her organization finds ways to build human capital locally, building on a theme we heard earlier, to import financial capital into communities and to solve problems that some would say are beyond repair. Communities Unlimited does this through small business development, water and wastewater development. She is also one of two people I could count on to return calls as I slogged through my internship with Hope 23 years ago. Please join us in thanking welcoming our panel. All right, as we heard from Bill's opening remarks and from previous presentations, financial inclusion is a prominent topic of interest, perhaps more so than at any other time in recent memory. Indeed, it is the theme for today's event. So we're going to begin with a seemingly simple question for all of our panelists. We'll start with Tom. Why is financial inclusion important to you in your work? After Tom, we'll move on to Judy and then close out opening remarks with Ines.
Thank you. It is wonderful to be here, and indeed I'm humbled by some of the previous speakers and the audacious agenda before us today. I also love that introduction as barely a 5'6" guy who had dreams of becoming the last Jewish point guard in the NBA. To have the word giant associated with me is indeed an honor. So thank you very much. Financial inclusion is at the heart of some of the work that I do and some of the auspicious agenda before us today. Previously, we had spoken, there have been movements around lack of access to capital in various spheres, to home ownership, to attending higher education, among others. And I think from where I sit, unfortunately, what some of that early drive about lack of access delivered to us has been predatory inclusion. That is, the notion that access became so much more important than thinking about what are the terms of that engagement. And I think that that's where the notion of financial inclusion starts to get us. And I want to, if I can take a couple of minutes, to relate that to racial wealth inequality in the United States. And a couple of the speakers have referred to it and given some of the dimensions. I want to dig just a little bit deeper as some level setting and some landscaping before we move much further in this conversation this morning. The average half above, half below white family in the United States has approximately $188,000 of net worth. Everything they own minus all their debts. The average black family has approximately $24,000. Right. That is 12 cents of black wealth for every dollar of white wealth. And almost no matter what data set one looks at, that 12 cents on a dollar or dime on the dollar ratio has unfortunately stood the test of time since I started and others started doing this work a little over 30 years ago now. Of that net wealth, for most families in the United States, 2/3 of it is not in the form of stocks and bonds or savings accounts, it's in the form of home equity. And that's why the reference earlier to home ownership and the terms of lending and what different federal agencies are doing is so critically important to this. If 2/3 of the wealth is in home equity, what are the components of that? So in the United States, I want to suggest two large buckets that I would like us to think about. One has to do with what are the rates of home ownership. So nationally, white families, 73% of white families are homeowners versus 45% of black families. In Mississippi, 79% of white families own their home and 53% of black families. Mississippi is a little above the national average, I think, because of the notion of agriculture and farm and the way that farms play into that and in rural counties. All right. Given that difference, I wanted to ask and present two questions before us today. What if, and both of them are what if questions, what if the rate of home ownership were the same for African Americans as it is for whites? What if that rate got up to 73% nationally, or hypothetically 79% in Mississippi? And what would that do to wealth? Because home ownership is 2/3 of that wealth. Nationally, it would raise black wealth by $44,000. That is more, if you will, than the current median wealth for black families. In turn, if we ask the second question, which goes to the broader question of appraisal and residential segregation and how homes are valued, what if similarly situated homes in white and black communities had the same value? That is, controlling for blades of grass, architecture, year built, everything we can possibly grab in that. That would increase black wealth by another $23,000. So we add those together very quickly, we get about $67,000 added to median African American wealth in the United States. A couple of times more than where it is today. By itself, putting those two together closes racial wealth inequality, just white and black, by about 40%. The largest driver of wealth and wealth inequality in the United States for most families, not at the very top and not at the very bottom, has to do with home ownership. And lastly, and I want to leave some of this for the conversation later, if those are the drivers and those are the sources, what tools and advocacy do we have at our disposal? And I think we have to look at both, how do we break into the rate of home ownership disparity, white and black, and there are a lot of tools there, some of which are mentioned earlier, having to do with first-time home ownership, having to do with what terms of the credit look like, having to do with a lot of home ownership patterns. The second, about the equity, goes back to the appraisal, breaking down residential segregation, probably the toughest challenge before us. So I want to leave some of those for conversation later and certainly for questions. And I think I'm turning it over here next.
You are. Thank you so much for setting the stage for us, Ed. Thank you so much for that introduction. Good morning, everyone. It is a true honor for me to be here with all of you. I'm going to repeat what you've heard before, and I wish you all could come up here one at a time and look at this room. It is spectacular. It's absolutely beautiful. I'm really happy to be here representing the Urban League of Louisiana. Most of you may be familiar with the Urban League. My colleague Portia Espy is here. She is your president and CEO for Mississippi. But I'm glad to be here to talk about what we're doing in Louisiana, because I think that there are a lot of similarities between Mississippi and Louisiana. Unfortunately, our states end up at the top of all the bad lists and at the bottom of many of the good lists. And the work that we do at the Urban League of Louisiana works to change that. Let me also, of course, thank Bill Bynum, who I really, with every passing day, just admire him more and more. A true genius, and I know all of you here know that. You should know that that is how we feel about him in Louisiana as well, and across the American South and across this country. He is an advocate, he's an analyst, he's a champion for the kinds of issues that we've been talking about today and that we're going to talk about on this panel. So Bill, thank you so much for giving me a chance to be a part of this really important conversation. At the Urban League of Louisiana, we focus on a number of issues, and it's one of the things that makes us a really, really unique organization. We focus on education and youth development. We focus on workforce development, policy and social justice, and also entrepreneurship. And it is our work in entrepreneurship that is led by the very, very capable Classy Duncan that I want to kind of focus my attention on today. It is one of the core pillars of a signature body of work at the Urban League of Louisiana that we call the Sea Change Collective. It's spelled S-E-E because we want to actually see it. We're really tired of talking about it. We're tired of reading about it. We want to see the change, but it's also based on the term SEA, sea change, which means a complete and total transformation. And that is also what we are looking for. We want policy changes, we want practice changes, we want program changes across our state, starting off by looking at the greater New Orleans region. And we want these changes because we want to close the racial wealth gap. So I'm really, really excited to hear what you have to say, my fellow panelists here, about that, because it is a critical, critical body of work. If we don't close the wealth gap, the economy, the economic output that supposedly we all seek is never going to come to pass. We call it the racial wealth gap, but in my mind, closing the racial wealth gap is a true economic development strategy, and we have to start seeing it as such. We think about traditional economic development strategies, how to retain businesses, how to bring in new business. It has a lens that really kind of goes over the head of many of the people that we should be talking to and focusing on, which are members of our communities. If we think about how to close the gap, you just heard a very straightforward example as it relates to home ownership, which, by the way, is another area that we're very focused on, along with how do we increase income and wages. These, to me, are very simple principles, but it seems to be a mystery to so many about why we are in the situation that we're in economically. And so I'm hoping today to talk a little bit more about what we are learning in Louisiana as we work with small business owners and we hear from them about the challenges, but also share some of the opportunities that exist. And we know that when we're able to close that gap, we're going to increase economic output by billions of dollars that we leave on the table. And so I'm looking forward to continue the conversation.
Great, thank you, Judy. We're right there with you. Thank you for the opportunity to be here, Bill and Ed. As Ed said, Communities Unlimited, we've got 96 people on the ground in 7 states in the South, from Texas to Tennessee. Dr. Wiggins, to do exactly what you asked us to do, to meet communities where they are and then work with them according to their priorities to address issues and barriers to prosperity. And so I want to broaden this idea of financial inclusion to include communities and community systems. And I'm super excited that 2 of my colleagues are here who make this work real on the ground right here in Mississippi. Alexander Brandon is our area director for environmental services here in Mississippi, Alabama, and Tennessee. And Dr. Marnell Love is our senior management consultant who works with small businesses, specifically in the Mississippi Delta area. And so the way that we look at it is, the antidote to poverty is wealth, which is why your book is so important to us. And for us, we think about financial inclusion in terms of, the individual who can't open a bank account. We think about the small business who can't get a loan because they don't have a banking relationship. What we often forget is the community and the utilities in that community that lose out when the bank closes or gets consolidated away. One thing, when we look at community wealth, from a capital perspective, the largest asset in any rural community is its water and its wastewater system. And we forget about that because the pipes run underground and we open the spigot and we assume that clean water comes out. When that is not the case, as we've learned certainly in this city and in so many other rural communities across the South, we begin to value that asset in a whole different way. And so when you have a straight pipe pouring sewage into a creek or into a ditch in between 2 homes, those homes are worth virtually nothing. And so when we talk about wealth creation, right, there's this symbiotic relationship between infrastructure and where a person lives and where their home is. I think the other piece I want to highlight, because we really haven't talked about it enough yet today, is the impact of banking deserts on our rural communities. Because in persistent poverty communities, we still work in a cash economy. And when a utility can't deposit the fees that are being paid for water and wastewater, it creates a huge problem for them. At the same time, that community has lost the opportunity to go to a banker and say, look, our pump isn't functioning. We need a small loan to do a quick fix to make sure that we can get back online and provide folks with water and wastewater. The bank in the next metropolitan area doesn't understand the risk of lending to water and wastewater systems, and certainly isn't going to make a small dollar loan to that community. That's why in 1992, we started a CDFI focused on making loans to water and wastewater systems. Today, we have the largest portfolio of any CDFI in that work in water and wastewater loans. We can make an emergency loan in 24 hours to help that community out when we have the technical assistance providers on the ground that are working with that system. So I just wanted to expand the way that we look at financial inclusion and the role of banks in this whole story, not just from the individual, not just from the small business, but also from the small utility perspective and the infrastructure.
Thank you. Ines, let's stay right here and just let's continue to talk through this community asset framework that you've shared with us. Can you just talk about the importance of well-functioning community infrastructure and how that factors into an individual or a family's ability to build assets, whether that be a home or a small business or something else?
So we know that single-family home that is connected to centralized wastewater system automatically has a 8% to 13% increase in value to a home that is based on a septic system. Now, again, if you translate that, and I had a picture up, If you've got a straight pipe that is pouring untreated sewer into a ditch in between homes in a neighborhood, the whole value of that neighborhood decreases substantially. And I can talk more about this story in a little bit later. Luckily, this is before lunch and not after lunch. But the same holds true for commercial properties. So if you have a commercial property that is connected to a centralized wastewater system, it is automatically 10% an increase in value over one that is not. And I have a very specific story here in Mississippi where we're working with a restaurateur who wants to start the first and only restaurant in a rural community in the downtown and revitalize a building that, in that downtown would really add a lot of value. But the whole downtown wasn't connected to a central wastewater system. It would have cost that entrepreneur $25,000 to put in a commercial septic system. It totally precluded them from taking that step or even taking on enough debt to make that happen. And so the community lost out, but also that entrepreneur lost out to really build that asset in that business that we saw him build, that he could have built.
Thank you, Ines. You spoke about just the role of entrepreneurship here and the barriers that the entrepreneur needed to overcome. I'm going to come back to Judy. And she mentioned the Sea Change Collective report. If you haven't gone online to read that report, you really need to take the time to download it. What I appreciate about it, Judy, is there is much more ink devoted to solutions than the challenges. And so there's a wonderful call to action in there. And so, I'm wondering if you could draw on your experience running the different centers that Urban League of Louisiana does to support entrepreneurship. How do differing experiences and levels of capital access affect diverse business owners' ability to start, grow, and persist?
Oh, thank you, Ed, for that question. Again, it's really important for us to pay attention to what we're learning from community. I mentioned Classy Duncan, who serves as the lead, our vice president for the Center for Entrepreneurship and Innovation. She's got an amazing team of people who do the work of connecting with community to provide entrepreneurial training, to provide corporate partnerships that bring programming and assets to our small business owners of color in Louisiana. And these areas are really critical. I'll tell you, since 2020, we have offered 11 different programs with corporate partners to bring resources to small businesses who obviously have struggled to stay afloat since the start of the pandemic. You heard this said in a different way earlier, but the way that I think about it is when it's cold outside, businesses owned by people of color are colder. And when it's hot outside, businesses owned by people of color are hotter. And so when 2020 came along, they were already distressed, and they've been historically distressed. And so we had to go out and create those partnerships at the Urban League of Louisiana to be able to ensure that we were connecting our small business owners across the state to those necessary resources. Those were 11 programs in partnership with corporate and with government. We also had to provide training to the business entrepreneurs. You will remember all of the talk about the PPP loans, about the EIDL program, and how difficult it was for businesses owned by people of color to be able to connect to those federal assets. They had difficulty with the forms. The requirements were foreign to them. It was as if it was a different language that was being used to communicate with them, and interpreters were needed. We were very pleased and proud to be able to be one of the interpreters. There were many other organizations doing great work in Louisiana that worked with our small business owners. But it is so important to also look back now a few years and a half and to think about what we learned. I'll tell you some of the things that we learned. Our small business owners have to devote all of their time to make their businesses work. They have to devote every single second of every single day to just make their businesses work, whatever their businesses are. And by the way, most of businesses owned by people of color are in the food service industry, the food service sector, and the hospitality and accommodation sector. That's one of the changes that we have got to make. We have got to increase the number of sectors. We have to create a variety of sectors where our businesses will have opportunities to start businesses, to grow those businesses, to make sure that they're profitable, and to make sure that they are sustainable. And that's the mission of the work that we do at the Urban League of Louisiana. But we learned that business owners have to devote all of their time there, so they don't have the opportunity necessarily to learn the language of administratively speaking with potential funders or with the government or with corporations that want to take their assets and have their assets hit the ground and benefit Black-owned businesses. So organizations like the Urban League of Louisiana, those business development organizations, entrepreneurial training organizations are really, really critical. We need to be as strong as we can be so that we can be interpreters, so that we can be trainers, and just so that we can be the organizations that hold the hand of small business owners as they try to constantly figure out how to stay alive. It sounds very stark because it is, but I'm happy to also tell you that there are solutions. There are changes that we can make that really are basic changes, and honestly, really should be the kinds of changes that we all should be thinking about. Financial institutions, government institutions, corporations, we all should be thinking about this, because if we're able to close this gap, which means making sure that our small businesses owned by people of color have an opportunity to be in an environment where they can compete and thrive, we know that families will be stronger. We know that communities will be stronger. We know that economies will be stronger, and it will be a win for the future. We spend too much time stuck in the past. At the same time, we don't spend enough time acknowledging the history of the past. So we have to really be truthful with ourselves. We have to acknowledge the history of this country, acknowledge the history of institutional racism. These are real accounts that have impacted generations of people of color in this country. So while we must know our history and we must come to grips with it, no matter your race, we must acknowledge that history in order to create a pathway and look at those opportunities and be able to take advantage of those opportunities for the future. Ed, you mentioned Sea Change. Sea Change is a collective impact effort that brings together lots of partners to look at how to do that. How do we successfully change the narrative, build public will, and create that pathway to the future to benefit small business owners, because we know that they are the anchors in our most underserved communities. And then how do we look at institutions like Hope that are committed to being the type of financial institution that meets our small business owners and community leaders where they are? You've heard this already this morning, and you'll continue to hear more of it from this panel. And what that says to me is that this is not rocket science. This is about vision and will. And we have to look to the heads of financial institutions. We have to look to the heads of government organizations. We have to look to the heads of corporations. And we have to be on the lookout for those who have the vision and the will to help to create the opportunities that are right there in front of us. And so I'm again, really excited to be a part of this conversation, because I know what is possible. And I think all of you know what is possible as well. We just have to come together and be committed about making sure that we don't accept anything less than what we know we need to create the kind of economy that is going to work for everyone.
Thank you, Judy. All right, now we're getting to the good part. I want to, Tom, you kind of teased a little bit earlier about solutions, how we get there. Judy talked about institutional racism. You've written extensively on the role of public policy and what it has done to create the conditions that we're working to overcome. You also put a big number out there, $67,000. How do we get there? What are the policy solutions? And what is the responsibility of the financial sector to get us there as well?
Questions I've been struggling with for 30-some years. And I'm here to tell you that, unfortunately, it's a growth industry for the wrong reasons. Because racial wealth inequality, in fact, is growing worse, even as there may be some individual mobility. At the equity level, those numbers, the differences still remain very stark and unfortunately are growing. I'd like to tag on and underline one of the points that was just made about history. History is not just in the past, it's what we're living right now. It's what's framing this entire conversation. It's what's framing this entire day. I know that some of my work has to do with the Pickford class action lawsuit and looking at a settlement that was made against the Department of Agriculture for decades of systemic racism and discrimination. That's not stopped. It's taken different forms, but it's all of the, it's all of the same piece in a lot of different ways. So the solutions, I think, really have to do with understanding our own history, understanding how all of this has come about, and not just unwinding it, because that would take us back to ground zero, but to redo it in a way that really meets our aspirations and really meets our values in that sense. And that may not be about a particular number around racial wealth inequality, but the direction that we're headed in. I remind myself, people often ask me, Tom, you've been doing this for so long, how come you haven't committed suicide yet? With this work, what's your sources of inspiration? And it's rooms like this. It's events where I get to go around the country and talk to folks. Not just talk, but see the organizing at the community level. And I'm reminded of a particular instance. I'm reminded of going with the foundation personnel, and we're doing a listening session, and this was like 15 years ago, on racial wealth inequality. We're in Southern Illinois, and if you know Southern Illinois, you've almost crossed the Mason-Dixon line in terms of the culture. And we're asking a small focus group after we delivered all of, a couple of academics and a foundation official had given all the numbers. And the organizer stood up and asked the room, what would it mean to you if racial wealth inequality were solved? And all right, so I'm the academic, and I'm thinking, someone's going to come back with a number, and this is going to help me to define parity. No, what they came back with, it would show that people care about us and want to attack that problem. And it would show dignity. We heard the expression earlier about a dignity economy. And this, I think, is involved in some of the solutions that we can talk about, whether it's first-time home ownership, whether it's the terms of credit, whether it's involving the cancellation of some egregious debts that never should have been there in the first place, in my estimation, like student debt, which is an extraction of wealth and is on the negative side, and simply dealing with that, even if this administration has its way of tinkering around it at $10,000 or $20,000 level, will go a long way and would help lessen the extraction of wealth that provides more capital for first-time home ownership, business development, and all sorts of other things involved. So when I think about, lastly, and I just want to close this section off here for myself without hogging the time. When Ines talked about infrastructure, they're clearly, I want to lift up her point even more, and that is talk about social wealth. Social wealth meaning the infrastructure that society creates so that we don't have to spend private money to do it. And the example of the sewer system, of the septic tanks, if the infrastructure and social wealth isn't built up like that, it takes our individual privatization of wealth to create the conditions that we can have that home, that business, and that farm. So I think that relationship is incredibly important here.
Thanks, Tom. Judy, I'm going to come back to you to start this next round again and really just ask us to stay focused on solutions. And in particular, I'm wondering if you can speak, share a call to action. What is the role of the financial sector in advancing Black business ownership and closing the capital gap?
One of the things that we hear from the businesses that we serve at the Urban League all the time obviously speaks to capital, access to capital. And it's a real challenge because many of them can't get any access to capital. Some of them can get some access to capital, but they know that it is not equitable. They know that their white counterparts are getting more than they are able to secure. We know that this is critical because if you don't have capital, it's going to be very hard for you to start a business. You could have the best idea in the world, but if you don't have the resources to be able to start your business and to keep that business alive in the first 5 years, we know that's the critical window to determine whether or not a business is going to be able to sustain itself. So access to capital, really, really critical. We also know that small businesses have a difficult time getting access to credit. Very similar, but a big issue for businesses owned by people of color. And so what is the criteria used to determine whether or not a financial institution is going to take a risk on a particular business? This is a real struggle for our businesses that are owned by people of color. And again, wherever there's a risk, there's an opportunity for a solution. And then we know that access to networks, which one might say, well, what does that have to do with a financial institution? Is it a financial institution's responsibility to ensure that a small business owner has access to the network of individuals who can influence maybe an investment, a venture capital investment in their business, or some sort of a partnership, minority-majority partnership for a small business? I would suggest that, again, these are all challenges for small businesses owned by people of color, but they are also opportunities. And so, Ed, some of the solutions that we would advance at the Urban League of Louisiana are those. How do we talk to financial institutions and ask them to become better educated in the needs and the unique opportunities of businesses that are owned by people of color? We would also say, what kind of data are you collecting, and are you disaggregating that data? So again, you can take a deeper dive in really understanding the environment. A lot of times those businesses get written off. They're not given any consideration. And in fact, people are running away from those businesses. And we say lean in. We say don't run away from them, run to them, and lean in and learn about the opportunities. We know that the demographics of this country are changing quickly, and we know in the next 20 years we're going to look much differently than we've ever looked in the history of this country. And so what does that mean, and what kind of an opportunity does that provide? And so we think that banks who collect data, financial institutions that collect data, disaggregate that data to better understand the small businesses is one solution. We also think that it is critically important for financial institutions to actually locate themselves in the communities that have historically been underserved. This is one of the best ways to get to know the individuals who you have not had a chance to serve, maybe have chosen not to serve in the past, but the best way to learn about a community is to be in the community. So we are always advocating for financial institutions to locate, whenever possible, in underserved communities. And when that's not possible, we're asking them to create opportunities to engage, real opportunities to engage, deeply engage with our communities so that, again, they have a better understanding, they can create those relationships, and that, we believe, will lead to the creation of the different lens that can be placed on how to take risk. We think that there are some tools that are out there that can be designed, some policy changes that can be made within financial institutions that, again, will be based on knowing our community members and our small business owners in a new way. And maybe it's less risky than originally thought, because there is a deeper and a better understanding. And then finally, going back to access to capital, really making sure that it is equitable. This is the number one issue that we hear from small business owners by far. They need capital, and they need equitable opportunities to compete for contracts. And so if we can really focus on those solutions, we think that we can really start to see that gap start to close. Businesses will have an opportunity to be successful. They'll have an opportunity to support and strengthen the communities that they anchor. They'll have an opportunity to hire people. Which helps on the workforce side. We know that many small businesses owned by people of color will hire those that many other places won't hire, won't give them an opportunity. Our returning citizens, as an example, young people, as an example. And so let's make them strong and give them the opportunity to be successful. And I think we'll start to find solutions to a number of other quality of life issues that we are also dealing with.
Thank you, Judy. You mentioned the disaggregation of data. And earlier we heard from Patrice Ficklin about the soon-to-be released final rule on 1071, which could be one of the most consequential rules ever released for increasing access to capital for Black-owned businesses. And I would just challenge this room to stand up for that rule when it comes out, because reaction is likely to be swift and loud, and it will not be the people who get denied loans when they walk through the bank doors. I will now move back to my moderator role.
Actually, can I add to that?
Please, Ines.
While we're fighting for that, let's also fight for a new Community Reinvestment Act. Mm-hmm. We are in this unique space,
Great idea.
This day, this month, this year, to really revamp that important piece of policy that connects the banking industry, the insurance industry, to the very issues that we're talking about here today. And so if you can't, as a banker, show up in my rural community, then invest in the Hopes, invest in Donna Gambrell's CDFI, invest in Communities Unlimited, because we have access to those customers that Judy has talked about, right? We are there in community and can mobilize those resources. And I want to talk a little bit about the example of the PPP loans that you mentioned. You know, so much of that programming went wrong because it was only in the hands of banks. Mm-hmm. It was when it came to CDFIs that we were able to move that money in rapid succession into rural communities, into communities of color, because we had the relationships there. And so what we need in the Community Reinvestment Act are those teeth that encourage banks to invest in CDFIs, both in terms of grants for capacity building, but also in terms of low interest capital, so that we can then move that capital, whether it's to a water and wastewater system or an entrepreneur.
Thank you, Ines. So we have about 10 minutes left, and so I'm going to move into just closing comments. And so why don't we start with Judy, and we'll just work it back this way. So again, we've talked about solutions, policy solutions, the role of banks. Again, just the things that we need to be thinking, the people in this room need to be fighting for to close the racial wealth gap through whatever means necessary?
I would like to at least frame my comments based on the question that came from, I think it's a law student in the audience, because it is so wonderful to see so many young people here. And I think the question was, what can that one person do? And it's so important to remember that each of us is so powerful. We're so powerful as individuals. We have the ability to do so much more than we give ourselves credit for. And once we are clear as individuals about what our power is to make the changes that we want to see, make the changes that we want for our families and for our communities, thinking about the shoulders that we stand on, but also remembering that we will be a set of shoulders that the future will stand on and rest on and lean on. And so really to think about and be clear about what it is that you can do, and to know that you actually have the power to make the change. If you're clear about what it is that matters to you, being knowledgeable, coming to events like this, reading and listening and talking so that you are aware of what's happening, taking the time to be thoughtful about what it is that you want to see. And again, not ceding your power and thinking that I'm just one person, I can't make a difference, what will my one thought or my one idea or my one set of actions amount to. I say that because as we think about the work that we're doing in Louisiana around the Sea Change Collective, what has made that work so powerful, and I think it's just going to continue to build and to build and to build, is because it is built on collective impact. So it's not just one organization, it's several organizations who have all come together and will continue to come together to support each other and to push forward together around these principles that we know are critical to creating what it is that we want to see. And I would just suggest that not just if you're a student, but every single person in this space, be clear about what it is that you want to see, because once you are, you will attract others to you, and you will be attracted to others who share similar values. And the more that we can come together and form around these ideas of what it is that we want to see for ourselves, for our community, for our families. We've talked about small businesses here today. We've talked about closing the racial wealth gap. It's also about being able to support the work that we want to see, but it's when we come together, when we look for vision, when we look for will, and when we come together around what we believe in, then I think we have the best shot possible to win the future. The only way we're going to win the future is if we're clear about what we want and if we come together and work together in order to make that possible. Thank you again for this chance to be here.
Thank you, Judy. I'm even more inspired. Let me close with two lines of thought. One is, but of course you don't know. As long as I've been in this work, I have never been challenged about the data. There has never been a serious challenge about Tom or Melvin or Derek or Sandy or any of us doing this stuff. No one has ever said, your methods are horrible. That's not what the Survey of Consumer Finance says. That's not what this study says. And the reason for that is that the data is accurate, but we do get challenged all the time. I can be sitting on an airplane and I'll take out a book or a manuscript and somebody will be looking over the shoulder and saying, oh, that's interesting work. I know why the racial wealth inequality exists. It's because of, and they will start to run the mouth, it's because of those people don't value education, those people can't defer spending, those people this, that, and the other thing. Building into all of the racial tropes that justify racial inequality in the United States. Earlier, several folks mentioned narrative. That's damaging narrative. And that's narrative that has to be confronted. And I'd love to talk to folks about that later, about how some of us and others around the country are attempting to do that with strategic, critical communications and narrative building, community by community. The second line of thought I would like to go, and excuse me, the answers are not brain science. Mm-hmm. They really aren't. We see it in Hope Community Credit Union. We see it in self-help lending to prospective homeowners that financial institutions otherwise wouldn't lend to. We see it in Dudley Street Neighborhood Initiative in Boston. We see it all around the country in pilot or demonstration or relatively small forms that are really successful. The part of the equation that's missing, in my view, is power. Is the power to marshal those resources, to move from thin coalitions to deep solidarity that moves us forward and holds up the successful practices and institutional building that is right in our communities right before our eyes. And from where I sit, that's the prime challenge. The prime challenge is not to sit as individuals, but the challenge is to do a kind of networking that helps to build a community and constituency that will define what those solutions are, that will help put them on the ground, enact them, and will fight like hell if somebody tries to take them away. So thank you.
Thanks, Tom.
So I'll add the rural lens here, and I'll pick on my colleague, Dr. Love. Here is an accomplished academician with solid practical skills of working with small businesses who decides to come back to Sardis, Mississippi after a long career in Chicago. That's what we need more of. And so for all of you who come from rural communities, I strongly encourage you to take the skills that you have learned and bring them home. Step into leadership. We need a whole new generation of leaders, and they better be diverse, because otherwise we will never change that narrative. And start a business in that community, right? Step into, become a water operator. This is an industry that is absolutely desperate for young, skilled people. If you want a good paying job in a rural community, become a water operator, because we really don't know what we're going to do in the next generation when we don't have enough of them. But then also think about stepping into and organizing that community. We haven't talked a whole lot about all of the federal money that is coming down the pipe right now. It's going to miss communities that don't have that strong local leadership. And so we're constantly building these leadership teams and looking for the young leaders that can step into this work with us. And I encourage you all of that generation and older, go home, go to your rural community, and really make a difference.
Please join me in thanking a wonderful panel.
Thank you.
We will now transition to our next panel, and I'll invite Andy Anderson, Donna Gambrell, Kiad Burt, and Bill Boyne-Lanham to the stage.